Nathan, great to see you again. Thank you very much. These are indeed uncertain times, aren't they? And we've had lots of people at Move IQ asking for advice, seeking comfort. There's a lot of worried people out there, and understandably so, I think, after this. Well, they described it as a mini budget, but it wasn't really a mini budget at all, was it? So I know, how many members does Propertymark have? Is it 8,000? Did I pluck that out?
18,000, so we've got 18,000 members.
18,000 members, and by the very nature that they have committed to being members of Propertymark, and thereby they are committing to the codes of practice and the professional standards and the self-regulation and everything that you guys stand for at Propertymark, one would naturally assume that those are 18,000 of the very best agents across the country. And they really are across the country. So I was really keen to get your take, given that you head things up, and therefore you are one of very few people who hear first-hand information right across the country in all price brackets. So Nathan, what on earth is going on out there at the moment? It's complicated, isn't it?
Interesting times, Phil, and I'm saying it with a smile because we have seen these things before in various guises, but change is always uncomfortable and worrying for people. We have had a mini budget recently, which has obviously created reactions. The bank is fighting inflation and using interest rates in order to do that, and that is having a real-term effect to people in their pocket, and it has done for a period of time with food, with fuel, with living accommodation costs, and this is the next phase of that, effectively, really. And there are two things. There's what's actually happening in people's day-to-day lives, and there's the perception of what is or could happen. Yes. And very often fear is very different than reality when you look back in history, really. So there are a lot of worried people out there.
Tell me more.
So I mean, and let's look at it now. I mean, interest rates at the minute 2.25%. It is a big jump from where we were. We were literally hovering above zero. So in real terms, that's quite a jump. If you take the rental sector and you've got a buy-to-let mortgage, probably the chances are it's on interest only. That's the majority of buy-to-let mortgages, and you get the rent, you pay your mortgage, and the little bit that's left, thank you very much, that deals with repairs and pays the agent and so on. Well, if all of a sudden that monthly payment doubles, then all of a sudden there isn't necessarily the money there to service that. And then that means landlords have to go back to tenants to increase the rent at a time that they can't necessarily afford to do so. So interest rates has a direct effect in different areas. When it's people's own houses, more and more people are actually on repayment mortgages. Obviously, that's the way that things work. It has a real-time effect on how much they pay out every month, and they worry how far will that go. It does mean people have to make different choices what they do day in, day out.
How is it affecting, just in the last sort of 10 days, behaviour on the street and people's buying behaviour, or indeed selling behaviour?
Absolutely, in several ways. We've seen a lot of interest in the media with people's mortgage offers, for example, being pulled, and all of a sudden the fear that they've got a new mortgage offer. If I probably clarify that a little bit for people, normally when you get a mortgage offer, it usually has about a 90-day term. So if you don't take your mortgage out and draw down the mortgage within 90 days, then the lender then has to just reassess and reissue a mortgage offer. The reason we've had a lot of mortgage offers that have been advertised in the paper coming down is because the actual length that the conveyancing process to go through now isn't 4, 6 or 8 weeks, it's 17 to 20 weeks. So the reality is, the mortgage offer will be issued and the conveyancing process hasn't been completed. So the mortgage offer drops off, and then it naturally has to be reissued. Because there's been a change in interest rates. Obviously, the products do actually then get changed. And so part of that process is actually something that happens every day. Lenders have, though, been changing their rates, and that is having a real-time effect on people, because when people have bought, they buy by what they can afford to pay in their own mind every month. Yeah. And does that mean they can afford a 4-bed or a 3-bed? That's the real impact of where we are. And we have perhaps become acclimatized to very low interest rates, over a period of time. and I'm not going to harp on about when interest rates were 17, 18% in the, if we look more recently, 2008, that sort of area, we were running at about 5 and 6% at that era then. And obviously, because there was a correction in the marketplace overall, interest rates were low. We're now seeing the results of a stronger economy. We are seeing the results of employment, and that is driving things through. And the interest rate is the balance that helps control inflation.
I read somewhere that 36% of homes are owned outright without a mortgage. So those people will be sort of sitting quite comfortably, I guess. But then there's an awful lot of people, I don't know, you probably do know, of people that have a fixed rate mortgage. And so things won't be changing for them in the medium term.
They won't, but they will notice the difference at the end of that product.
Yes.
And probably quite a substantial jump as well. Yeah. So a lot of people, when we went into the pandemic, fixed 2, 3, 4 and 5 year mortgages. And we will see those people come to the end of those terms. Sure. And they are artificially low rates. And so they will see a jump. Yeah. What I would urge people to do, if they are in that position, Phil, and any of your listeners, is actually what they should be doing is planning now for then. And if they are in a position to put extra money to one side to ensure that they are not hitting a shockwave of increase, now's the time to reacclimatise themselves to that in advance of being pushed to the edge.
Nobody likes uncertainty, do they? Whether it's a business or somebody deciding whether to buy or sell, or whether it's a government. Uncertainty is the killer of sentiment and confidence, and people don't understandably like making big decisions when they don't know. And I guess that's also the same as the lenders. What has happened over the last week or 10 days since the mini budget, everything's been thrown up in the air, and there's an awful lot of speculation without actually evidence yet, and that's really scary. I guess the lenders are overreacting, but pulling deals or changing rates, and then the press are reacting to that, and then people are reading it and going, "Oh my God, the end of the world." It's really difficult, but I guess it will settle down, and the sooner the better.
It will settle down, and for people that have their own houses, or even people looking to buy, we still have an overarching scenario that there is a limited amount of stock and there is demand, and so. The one thing we have got is, and we do know that whilst you do get short-term disruption, the machinery will continue to operate. And I think that's the important thing to remember. We're not looking at a case where half the country's unemployed. We're not looking at a case where there's so much housing available that people have got far too much choice. Yeah. We're in a situation where we still have a restricted amount. We still have a requirement, and it does mean people may not be able to be as aspirational as they were. But by and large, that machinery will still turn. So there is some reassurance in that.
You should be an estate agent.
So
I couldn't resist that. Given that, I have just said there's been a lot of speculation in the media and there's a lot of uncertainty. And therefore, everyone needs to kind of take a deep breath, is my own take, and just calm, don't make any rash decisions. As you say, the world isn't ending. We all need to live somewhere. Things go on, but just take a breath. Having said all of that, I read something, and I'd be fascinated in your thoughts on it, whether this could possibly be true. But it's being reported that the volume of sales agreed 4 days after the Chancellor's mini budget was the highest number in one day since early August. What are Propertymark members? Can that be real?
That's a statistic I've not actually had myself, so it'll filter through in our figures, no doubt. But it is interesting that how markets can react, and it's almost I'll get in there quickly and get on. We are seeing properties which are looking at price reductions. We are seeing properties which the market trends are starting to come back, but that was happening previously anyway. We saw our first August variations start to trickle through, so that, which is great news, because that shows that the market was already starting to level out. It's exactly what we needed after 2 or 3 years of unprecedented growth. 20% over two and a half year period is unsustainable, really.
Yeah, completely agree. We just need a period of consolidation. We don't need this speculation and uncertainty, but things will settle down. What would it take? Let me ask you this, Nathan. What would it take to crash the market?
The biggest driver, and I think you nailed it, is confidence, really. It all boils down to confidence. If people are driven in a non-confident manner, people then it becomes a self-fulfilling prophecy, really. So actually what would do it, it would be a combination of adverse media, not necessarily a balanced media, it would be a pointed media, it would be consumer confidence, it'd be mass unemployment, and it will be skyrocketing interest rates over a long sustained period of time. And I think whilst some of the government decisions have been questioned by people, there are other factors in there that actually they are working towards that. So if you look at the stamp duty that they announced, if you are a buyer today and you are about to make a saving on stamp duty, and I was talking to somebody the other day, they've got a £7,000 saving on stamp duty. And the question I said to them is, okay, so did you have the money for the deposit for the property and the stamp duty? And they said, yeah, we've saved that money. And I asked them a question. I said, what are you going to do with that £7,000 that you've saved? And it went everything from extra furniture to replacing the car to doing nothing with it. I then said to them, well, okay, if you took that £7,000 and you put that as over repayments into your mortgage, it might be worth going back to your mortgage advisor and asking over the length of term, if you put that extra 7,000 in, how much would you save in interest over the term?
It'd be a lot.
Absolutely. And, when you start doing those kind of calculations, even small overpayments on mortgages for people that can afford to do it are the things that insulate you many years down the line. And you look back and you've saved tens of thousands of pounds, and so there are things in the budget there. It's how people utilise that. Do they spend it on a flash holiday? Or do they redecorate? Or actually, do they work to make that money work for them, really?
On the topic of making decisions, reaching decisions in a kind of confident or as confident way as possible, because, and we have to accept that the media has a role to play. They report on the news, but they also, things tend to be heightened in the media, whether it's awful or whether it's amazing. That's how things get reported. I'm sure we've talked on this before, Nathan. Just a word of advice, really, for people who are reading a media, something in the newspaper, house prices are doing this, and they're using various building society reports or whatever it is they're using. It can be very confusing for someone to read that house prices are doing this, and that report and that indice may be completely irrelevant to them in their area, in their price bracket. Could you just give a word of advice as to how people should interpret some of that?
Absolutely, I should. You're absolutely right. The media will hive around something like a swarm of bees and create one story, and then it goes into another focus. The UK market is made up of lots of smaller marketplaces, and for most people, the actual national trends are not necessarily indicative of what's happening in their local marketplace. So we could give you agents today where they are still absolutely thriving at the moment, and I could give you agents in other areas where their market might be a little bit slower. And so actually, the reality is that probably anybody listening, they ought to be engaging with their, with property professionals in their area. They will give you an honest impression of what is happening in your local dynamic, and that is the most important thing. It's not what's happening in London trends, it's not what's happening in Scotland trends, it's not what's happening with the mean average across the UK, because the patches are very different, the activity is different, the prices are different, the demographic of the buyer is different. And so take comfort in your local market, because that is ultimately what's your safety net, and that's the only market you need to understand.
Something else that has been reported in the media recently is that some agents are not putting forward offers without buyers sitting with their in-house mortgage broker. Could you just clarify the right and the wrong of that?
Absolutely, Phil, and a very good subject for us to finish off on. From an offer point of view, let me put this very clearly for your listeners. if somebody makes an offer on a property, the agent is duty bound to submit that offer to the vendor, and that is regardless of anything else. That offer has to be transposed, unless the owner of that property has specifically pre-advised the agent in writing that they don't want to hear of any offers below a certain level. So the caveat for that is if one of your listers makes an offer on a property, that does have to be submitted to the owner of the property regardlessly. The second stage of that is the agents do have to verify the financial ability and clarify anti-money laundering procedures alongside that. So it doesn't stop the offer going forward, but as part of that process, they will need to clarify that the buyer can afford to buy it, clarify that they have the requisite finance in place. If they're in a chain, they will need to understand the chain and make sure we've got a complete chain. And the chain, for those that are listening that don't understand, that is maybe where a first-time buyer is buying somebody's terrace house, that person's then buying a semi, and that person's buying a detached house. So that will be a chain of 3. So they check all of the component parts of that chain are in place. And once they've got that information, that then allows the householder and the vendor to make a decision as to whether they will go ahead with that buyer, because if they do that, they take the house off the market. So that's a big commitment to make.
Thank you for your time. Very much appreciated. How are things at Propertymark?
Very well, going extremely well. Yeah, we're gunning forward. We've got education and qualification awards coming up, as you know, celebrating those people that are qualifying, and more people are qualifying and becoming professional every single month, which is fantastic news. And I think in the market conditions that we're entering into, people want to know that they are dealing with trusted professionals and that can guide them every step of the way, and that's what we aim to do.
100%. Keep doing what you're doing. Much appreciated.
Thank you, Phil.
Thank you, Nathan.